Good morning, everyone. It's time for our daily plan into this upcoming week with not much happening other than the FOMC and about 0.6 or 0.7% from all-time highs. That was a bit of being facetious. Okay, so here we are. Let's take a quick look at where we are, and we're slightly green in the pre-market, up above. We closed at around 70, a little bit up above that. We have the IC whale today here, and I have it labeled as whale center. I probably should have labeled it a little differently. Let me quickly jump to that, and then we'll get back around. So the IC whale, as some of you might know, is a large player who has a subscription service, etc., and a hedge fund who typically sells iron condors. Good morning. Good morning. Okay, the gang is filtering in late. Okay, long weekend, I get it. And what he did today, well, on Friday, rather than selling iron condors, he bought them. Realized volatility has been low, so the bet is buying inside the expected move, and the bet is that we exceed the expected move, either to the upside or to the downside, agnostic in terms of direction. And so he's long the 68.85. Good morning, Ivan, my boy. So he's long the 68.85, 68.90. Any insights you have, Ivan, you want to throw in? I'd be more than happy to hear them. This is Ivan. Ivan's no joke. Ivan's a great trader. And 68, 55.50 on the bottom. So here's where the whale is. And well, I might as well do this now because I'm here. So what my eye is immediately drawn to, let me just get rid of, I really like this. What my eye is immediately drawn to is the triangles. Bounce off of the positive gamma, we go down, we stall, we mean revert, we go back up, we get too far, we get sucked back down. We're in between two of these levels. And so kind of if you just picture where the gravity would be somewhere in the middle. And luckily we have this pivot right in the middle. Easy triangle, 55, 70, 75, and 85 stall. And that's kind of what the pre-market action's been doing. If we can break over this and stay over this for a little while, we have market makers short gamma. Oh, okay, that's the IC whale on top. If we can break over this 90 and stay over it, then we have a potential path where accelerating in the direction of the move toward all-time highs, maybe a little stall at 6,900 or 69.10, whatever. But there is a potential path, conditional if then, depends what happens. So just keep that. Let's just keep that in mind. Default, we should stall out at 85.90. We should have, if we get over there, we should have another battle near the round number, 6,900. And then if we slip back below this 90 area, we're back in the job zone, and we're caught in this job zone. The expected move this morning when I looked put us down right near 68.50, 45, somewhere down here where we happen to have the IC whale structure. So let's just look at the other side of the coin. The if we kind of get down to 68.50, 68.55 round number-ish, and we break down. Well, if we break below here, once again, we have our triangle. Here's the other side of his trade. And we have a center at 40. So let's think of it as 50, 55. This breaks, have a center of 40, not much underneath it. A little bit of support, quote unquote, down here. And so maybe we go down here, try to extend it a little bit more, and come back up. This is outside the expected move. Wouldn't think that it, quote unquote, should happen ahead of the FOMC with the market on the holding pattern, but you never know. And of course, below that is 6,800 round number, which once upon a time, not too long ago, was, oh my God, if we can only get there. And now it's, oh my God, can we only hold it? Longer time frame, below us, we have, and don't think I'm showing it on the chart. Let me just bring the time frame out a little bit. Longer time frame, we have, yes, for your reference point, we have converging moving averages, the 60 on the 20, right around here. And that's, we can think of that as a CTA, a hedge fund trigger, although some say it's down a little lower. And so that would kind of be where, even if we have some weakness, even if after the FOMC it's sell the news, whatever, that's kind of the level that we want to see. 67.50 was a previous high. I forget what month. Nice round number to remember. And so let's kind of keep that in the smaller, bigger picture in mind. While we're talking about the smaller, bigger picture, let's take a look at this smaller, bigger picture. So here's the expected move for Friday based on last Friday's price action. So 67.70-ish, basically right near that converging moving average to the downside. And on top, the expected move is saying well, new all-time highs and 6,700 in sight. And remember, I've been talking ad nauseum about the 6,700, about the 7,000, rather, about the 7,000 JP Morgan collar. I said it in October during the sell-off. I said it again in November. I'm saying it again now. That's a reasonable target-ish. Don't skew me if we get to 69.90 or 67.42. I mean, excuse me, to 69.91 or 67 or 7,042 ish. We can get stuck and mean revert toward it from below and get sticky in that area, or we could get above it and kind of get sticky below it. And yeah, so that's that. Quick word about volatility, then I'm going to turn the mic over. Ivan, any comments or insights while I'm getting this ready? Okay. Okay, let's do a simple volatility thing. So as I mentioned in my chat and to my subscribers, maybe even on Twitter, I think I had a little Twitter discussion with somebody. Friday, as is always the case on Fridays, not always, a vast majority of the time, volatility, VIX, IV, Vega, whatever you want to call it, dropped into the close and popped into the open. Nothing to see here. That happens all the time. I mean, that's kind of standard playbook. To get a feel for how the market's positioning, just kind of at a glance, I like to look at the difference between VIX, which is 30-day volatility, not exactly, but close enough, and the VIX 9-day. Now, the VIX 9-day, and I've been explaining it to people, and I'll explain it again. The VIX 9-day looks at the option positioning in the SPX, project out 9 days, then go to the Friday before 9 days from now, i.e. this coming Friday, with the FOMC included in this Friday's mess, and next Friday, options expiration. So the VIX 9-day is going to give us a pretty good sense of what's going on locally in the here and now. So let's keep an eye. I'm keeping an eye on that. You can do what you want. So I'm keeping an eye on that. The VVIX, in the meantime, with all this, has been saying the options market's already hedged. They hedged up with the overpriced options in October, November, locking the barn door when the horse escapes, buying the hurricane insurance after the hurricane, and that's where we are. I did a write-up about VIX in my weekend note. It's a free note for everyone. Me and Master Bailey did like kind of a joint note. Now we're going to kind of do a little YouTube thing on it later. So I'm not going to go into the details on the VIX right now. I may circle back to that. What I'm going to do now is pass the mic over to our futures guy, technical term, and let Chewy tell us what he's seeing. So let me get Ivan off the stage and go ahead, take it away. And if you have a chart, put it in there, and I'll put it on the thing. Oh wait, there it is. I see it. Okay.
Good morning, everybody.
Let me remove mine. Put yours. Okay, go ahead.
Okay. So right off the top of the gate, the first thing that I'm watching for is price holding above 68.84. That's kind of my weak floor for today. I'm going to try and trade from here to our ceiling at 68.92, where it kind of marked a weak reversal zone. We've reversed already this pre-market, in my opinion, making that reversal zone even weaker. However, I'm still leaving it on the chart. If we can break above that 68.92, I've got all these targets up here that I'm willing to trade towards. I like giving dramatic targets because if in the off chance we do have a big move, you're not flying blind. If we can't hold this weak floor at 68.84 right out the gate, then I think we can make our way down to 68.68, where I think we could potentially find a bounce or break below quickly to 68.62, 68.55 area in my bounce zone for a bounce. I do think this bounce zone would be pretty good. In the off chance that it's not, and we break below that 68.55, I've got two targets that I'm willing to shoot for in my short period.
And that bounce zone kind of corresponds to the lower edge of the chop zone. That's at roughly 68.40-ish, 40-ish, bottom of the expected move, kind of, sort of, a little overshoot.
And I'll overlay your ES levels now so you can kind of see how they compare.
And so what we like to do is, Louis' approach is using kind of standards, or his version of standards, future scalping, position sizing, targets, and all that. And then with the overlay, there's a better idea of what to expect as you approach those targets.
Right. And there's times where, for those of you that do trade TA and you have the entry, but it's just ends up being a bad trade. And it ends up being because there is some sort of option profile there telling you to avoid that entry. I think it makes it really good. Not just for entries, but to avoid the bad entries as well. That's kind of how I use it.
Good way to put it, to avoid the bad entry or the bad exit. That's a good way to put it.
But yeah, looking forward to today. I mean, if you want my 2 cents, I think we're going to be trading range with a little bit of upside bias here. That's why I have a little bit more targets and extensions to the upside. But we'll see what we get today. No, a quick note too is there's no, if you guys notice the today's events channel where I post news for today, there's nothing on today's docket. To me, that's always a red flag and kind of leads to a dud of a market day.
Yeah, that leaves more room for algos, and that leaves more room for regular trading bullshit, not our algos to kind of jump into it.
Right.
Technical term trading bullshit. Let me put this in there.
And I'll put this this photo of my chart in the cheat sheet channel as well, so you guys can kind of keep it up for reference.
Okay, good. Let me jump back onto the screen share. Here's just the ES with, with the same kind of things. And here I use normal trader lingo instead of my gamma lingo for the string. So, support resistance. I would call this probably inflection level better. Here's kind of where where the downside targets might be, etc. And for my subscribers, I have both versions, uh, creatively labeled V1 and V2 in the channel. So let's see. Yeah. So getting back to just a little broader view of what's going on. Like I said, I think we all know we have the FOMC this week, and the reaction to the FOMC and the dot plots and the interview and all that is going to determine what the path is from here. This week we also have on the earnings front, we have AVGO. We have a few names that kind of matter in the AI space. We have Toll Brothers today after the close, maybe, housing market kind of stuff. People like to, try to get a read through to the economy. So that's something that we need to look at. I'm just kind of trying to pull up my note and see if there's anything else that I mentioned in my note that I skipped. I'm gonna pull up my note. Where is it? How do I read it? View post. Okay. All right. Well, okay. So we had this week calendar. We have FOMC, jobless claims, and PPI. We have odds of a rate cut, 90 percentile, whatever. AVG, Oracle, and Sienna Network. So AI trade. So that can. Oh, they're spending on AI all-time highs. Let's jump back into Mag 7. Oh, they're not spending. Let's do something else. I don't know, whatever it is. I talked about the VIX. Today we have, the events calendar is light, but if the algos are looking for an excuse to trade, we have factory orders at 10 o'clock. We have 11 o'clock Fed 1 year inflation expectations. I guess if they want it to matter, they can make it matter. I talked about the triangle pattern. And that's pretty much it. I kind of see things the same way today, the way Louis sees it, and that is probably a chop zone, probably an upside bias. Folks could, a lot depends on the intraday flow. So let me just let's go to this view just for fun. So here's what we see here right now, and if you can read the numbers right where we are, here's we're in the zone, sticky right here, positive gamma plus, think sticky. If we get over 85.90, kind of a slog through. Customers are short, market makers long. So it's kind of a bit of a tough slog up there. But here's what I want to point out. If algos start coming in and buy 1,000, 2,000 contracts up here above the 68.90, or start buying the 68.90 and eat out this resistance. Remember, these positions are here now. A lot of them tend to stay. But if algos come in and start buying these up, the market makers sell them to them, and suddenly the book changes. And so there's intraday changes, and we see them in the room. We talk about them. Yes, 60, and he's 100% right. 68.85 is the key for directional traders. We got to get over that and stay over that in order to have that run up to 6,900. 100% right. 100% right. I couldn't agree more. Let's see what else we got here. Up here, we have the 100 wide gang that always sells with 1 DTE, and they'll be coming in sometime. They'll be coming in sometime tomorrow. I mean, later today, and selling somewhere up here again. And I tend to front run them when they do it and sell the same thing the next day, knowing that we're going to stall there, even if we get there on the day before, and it'll give me an exit. I don't know that there's really a lot else to talk about. Okay, 6,700. We had someone that sold it whenever they sold it. Money good. Got 6,700. Oh, this is for Friday. We have stuff for Friday down here below the bottom of the expected move that we talked about. But Friday is pretty thin. Friday is pretty thin. Oh yeah, let's now that I have an extra minute, let's switch gears back to now let's talk about the VIX for a change. Okay, now the VIX, I like to keep customer positions, not market maker positions. Yes, the market makers have to hedge it, and that's what quote unquote really matters. But for me, and if you're different, that's fine. It's easier for me to think of the customer positioning here and to think of the path that it's going to take. Should we, should volatility go up or down? So this coming, not Wednesday, this week, next week, Tuesday/Wednesday is VIXpiration. So all this stuff is going to go away. But at the same time, since this is close in time, this has a lot of gamma. This is what the market makers are going to be hedging near term. So let's do a quick if then. So right now we're below 17, and so we're kind of buried under these customer long puts. Yeah, people bought puts in the VIX. I did too. At 18, I even bought them at 20 when we were up here in the sky. I mean, it seemed to me like a pretty cheap, good risk reward trade. I always do them in ratios or broken flyers or something, because VIX just loses a lot of its value fast. And so we have a convex bet up. If we start getting above this 17 inflection point, 17 through 19 here is kind of choppy. Maybe we get a little nervous during the FOMC. But the real, if over 19, if over 20, then we have a potential run up. 22, 22 and a half, even 24, we have a potential run up. I don't expect it to happen, but we have this kind of dynamic to keep in the back of our head. So broadly, 17, 17 and a half. I guess we're kind of in the zone that the VIX market maker hedging is going to affect it. If over 17 and a half, we get into a kind of a little nastier area. Then if over 20, then it might start to get real. I want to show you something else, because I noticed, actually, I was reading somewhere, and that's what helped me notice. Vol6 had something, and a few other people. Now, this is small, 6,000 contracts, but there was some interesting trades. I put it in my channel. I forgot what they were. I have to look. Something like 17, 18, some kind of real interesting trades in the short term for like 10 cents, like maybe an 18, 19 or 18 something call debit spread for 10 cents that could like easily be a double if you get out of it. I don't remember the exact trade. It might have not been in the it might have been in the monthly, not in the weekly, because I don't see it there. But if you want to take a stab at something for the FOMC, maybe buy 17, 18 for 10 cents or something. But that'll be running into the FOMC. So as I'm thinking out loud, that doesn't make sense. So whatever you do, if you want to play around with VIX cheap, look to do something in the weekly, in the monthly next week. And we can kind of talk about that. And in my room, we'll strategize a little bit more. Also, coming more in my room, although I do a lot of SPX trades, that's my main stock and trade. I also do lots of other trades. I have other traders that put in trade ideas, short-term momentum, scalp for 2 or 3 hours in whatever the momentum name du jour is. Dan, who a lot of you know from a few other places, does volatility trades, earning trades, whatever. There's a lot of more stuff going on. So also trying to just, the stuff is there, trying to make it easier for people to find trades for people who don't sit there all day intraday trading the way I do. You want to take a 3-day trade, a trade into January, whatever, with less management. That stuff is there too. And we're just trying to think of how to make it more visible. So there's a lot available. I'm not trying to be everything for everybody, but there is some stuff for different flavors of traders in there. Plus, I think the education is great anyway. Okay, it's almost 9 o'clock. I'm kind of done. That's that. Let's just get back to SPX for one last look. So here's customer positioning. Let's get back. So you can see, okay, so thinking from the customer side of the table, here's the IC whale, long 68.85 call, short 68.90. Real easy, clean to see. Here's the calls. If over that, got a couple sold calls here at 95. You have long calls up here at 69.10. Customers start buying more calls in here and buying this up. That will help us go up. Over here at 68.75, you have puts that were sold. The market maker gamma, somebody sold at the money puts. They said, screw you. I'm not sure that's exactly what they said. So this 55 is the IC whale on the bottom. He's long these, short those, the 55s. Then underneath there's, let me see a question. A silver butterfly. So is that a broken wing-ish? It's 2 and 2.5, so it's slightly broken wing. Let's take a look. Okay, so before we do that, let me switch to Gamma Edge, which, as you see, I subscribe to everybody. I don't crunch the data myself. I take other people's crunch data and interpret it. Different data crunches. So let's take a quick look at the landscape of silver. Holy shit. Call dominated all through there. So 55, that makes sense to be the top of your range, absolutely. Silver's trading now with 53. So you're doing a put fly. So you're selling the in the money put, looking for a pullback into kind of where we are. Let me model that out. Let's take a look. Let's see what you're thinking. Let's see what you're thinking. And are we thinking a silver fly for December, for Friday? What expiry are we thinking? While you're doing that, I'll just kind of go to the monthly in the meantime and kind of see what that looks like. The 55, 53. Oh, for Friday. Okay. Let's see. Let's take a look for Friday. It's the 10th. Okay. The 55. Whoops, let me get rid of this. The 55, 53. And what's the other side of the trade? 50.5. A little cheapy down there. For 61-cent debit. It's got a good risk reward to it. It's got a good risk reward to it. We basically need to just sort of stay in the zone. Let me look at the okay, so all right, so let's take a look at what's going on just for Friday. So if we look at what's going on for Friday, Friday is put dominated, and yeah, the path is probably down a little bit. Now let's look at the monthly, which is the 19th. 19th is where the calls are. So let's just see what it looks like if we do all that. So if we do all that, yeah, if you're kind of wanting it to stay in this zone, we have the transition right down at 51.50. I might want to target a little convexity down toward there. Maybe a 53. I might want to go for something cheap, trying to get the move down toward that. With the stall down near 50 would be, one way I'd look at it. I haven't traded. I don't really trade silver a lot, so I can't really give you a nuanced interpretation of like what it might do. But we see put dominated here in that gamma. But how many contracts? 5,000, 4,000, small. Oh, we got 20,000 over here. Okay, so we have the 20,000 at 53. That's going to probably, on the gamma point of view, that's going to be stronger. Okay, so selling this 53 area makes sense. And yeah, move it out. Moving it out a little bit in time to give it time to work makes sense. Again, caveat, I'm not I just seem to have the reverse Midas touch with the precious metals. Unless I'm listening to somebody who does that stuff, like Alliant on Substack, Yamco on Substack, he's on Twitter. Those guys are really good at the precious metals and commodities. And if I see they have trades that I like, I might modify them a little bit. But I'm humble enough to admit that, other people know that stuff, and I'm just going to kind of look at it and maybe modify it a little bit to suit my view or suit my trading style. But yeah, I would say move it out, give yourself a little more time. All right, it's 69.04, so 69. It's 9.04, so I'm gonna hop.
Good luck, everybody.
Okay. Spot Gamma idea. Okay, Spot Gamma is smart. He's a smart guy. If they got that idea, it makes sense. Have a great day and a great week, everybody, as well.